Guernsey is the largest captive domicile in Europe and the fourth largest globally. Over a number of decades, the industry has been here. It's built up a significant amount of expertise, which has led to a very strong reputation for operational and service excellence and for innovation. There are a variety of captive structures which are open to companies locally, such as standalone captives, protected sale companies, incorporated sale companies, or risk purpose trusts. We have a strong but pragmatic regulator who is very approachable and who we have an excellent relationship with. They consult the industry wherever there are changes required, and they support new business. The regulator is also very amenable for business being set up in a speedy fashion, and captives can be set up within 4 to 6 weeks if required. And another advantage of Guernsey is the fact that it has decided not to adopt Solvency II and is not seeking equivalence. Solvency II would be a massive strain on capital requirements for captive owners, and the certainty that Guernsey has on its position has been very helpful. Guernsey is instead looking to introduce a prescribed capital regime, which is being introduced in 2015. Other benefits of course, for Guernsey are the central location globally and also the proximity to the London insurance market. Traditional captives are still being formed. We're seeing a number of formations across the island each year. However, on an overall net basis, you would probably have to say that it's a fairly mature market and it's fairly static in terms of licensed entities. Where the captives are coming from, well, they continue to be sourced from various domiciles globally and also from a wide range of industries. From Robus's perspective, we are seeing a number of Lloyd's syndicates and MGAs which are setting up captive insurance vehicles with us. The significant area of growth, though, continues to be in protected sale companies, and that continues apace. Since 2011, the number of licensed sales has increased by 90 vehicles. And also incorporated sales, and in the same time period that has increased by just over 30 companies. The main driver of sale growth continues to be insurance-linked securities and has been since 2007, and we're seeing a significant number of formations in that respect. The Guernsey Financial Services Commission is committed to adherence with the international core principles of governance. An overall review of Guernsey's regulatory framework is currently being undertaken. A discussion paper has been sent to the industry for review and feedback, and they're looking to implement any changes by 2016. Key area of focus for the insurance division specifically is in terms of the risk-based solvency regime, which is, as Guernsey is not adopting Solvency II, it's important to follow the core principles that a risk-based regime is introduced. Recently, William Mason, the Director General of the GFSC, has been appointed to the board of the IAIS, which obviously is very positive for Guernsey and shows us in a strong light, and also gives us a seat at the table. Well, for captives, it continues to be a low interest rate environment, which puts pressure on underwriting performance, whereas maybe 10 years ago they could rely upon obtaining 4 or 5% for their cash on a fixed deposit. Now you're getting very little return, and so any profits are really coming from your underwriting activities. One of the biggest challenges, I would say, for captive owners is regulatory changes at the moment, specifically around solvency regimes, whether it be Solvency II or more specifically in Guernsey, it's the regulator is introducing the prescribed capital requirement in 2015. And the industry has been undergoing consultation and doing capital impact assessments. Other challenges for captive owners are the changes in accounting standards. New UK GAAP is coming into force for year ends from 1st of January 2015 onwards, and that will result in increased disclosures within the financial statements, which in itself will increase management time and time spent by the auditors. That probably leads on to the next challenge, which is containing the costs of running a captive, and the increased regulation, governance, accounting requirements all lead to more time spent by the managers, by auditors, by all the service providers, and in turn can have a knock-on effect on the costs of the captive. We're looking to maintain our service excellence in 2015 for our existing clients, and also achieve a steady growth in the number of captives managed. We continue to look to be creative and seek new innovative solutions for our clients, whether that's for existing clients or prospective clients. We also liaise closely with our colleagues in Gibraltar. Guernsey is a non-EU domicile and therefore doesn't have passporting rights within the EU, and which Gibraltar does, and that provides a very complementary service to our clients in terms of fronting arrangements. We also look to support Guernsey as a domicile, reflecting its strong reputation and dynamism and quality of captive service.